Hello, in this video, I'm going to discuss the financial system. And in order to talk about the financial system, I need to first talk about the business environment. So let's have the business environment. And this business environment is classified into two. We have the macro environment and then the micro environment. And then under the macro environment, we have layers. And one of them is called the societal environment. And under the societal environment, we have systems. And one of them is what we call the financial system. And of course, we have other systems. But in this video, I'm going to just discuss the financial system. And this financial system has four elements. Number one is the savers and users of funds. The savers right here also refer to suppliers of funds, while the users right here also refer to demanders of funds. I will not be elaborating on this element because this is already self-explanatory. When we say savers, these are those who have extra money to invest. And then for the users, these are those who need extra funding. So this is the first element, savers and users of funds. For the second one, we have the financial markets. And this is defined as organized forums in which the savers and users of funds can make transactions directly. To illustrate, let's say this is the financial market, and inside you will be seeing the savers and users, and they are engaged in what we call trading activities, which is defined as the selling-buying transactions happening in the financial market. And as you can see in the illustration here, in the financial market, both savers and users of funds know each other. So it's like they are transacting directly. And again, savers will be in the financial market because they want to invest. And for the users, they are in the financial market because they need funding. So that's the second element of the financial system. We have the financial market. And then for the third one, we have financial institutions. And this is also called financial intermediaries. And this is defined as intermediaries that channel the savings of individuals, businesses, and governments into loans or investments. One of the examples of financial institutions is banks. But remember that financial institutions do not refer to just banks. Of course, we have other financial institutions. So unlike the financial market where the savers and users of funds will be seeing each other and they can transact directly, for financial institutions, given that there is already an intermediary, the savers and users don't have to directly transact. They can do the trading indirectly with the help of the financial intermediaries. To illustrate, let's say you have a bank, and let's say this is your savers. Savers will be depositing, and of course, they are expected to be paid back by the bank. And then using the money deposited by the savers, the bank will now have the money to lend to the users. The users will be borrowing that money and then expected to pay back the bank. Again, there is that indirect trading activity because you have the intermediary in between, channeling the savings of the savers to the funds of the users. To add, financial institutions participate in the financial markets as both suppliers and users of funds. So for example, bank, although a financial institution, may participate in the financial market as both supplier and user of funds. So that's financial institutions or financial intermediaries. Before I discuss the last element of financial system, let me just note that financial institutions or intermediaries as well as financial markets are regulated by the Bangko Sentral ng Pilipinas. With that, I'll jump to the fourth one. For the last element, we have the financial instruments. And financial instruments are contracts that give rise to the formation of financial assets of one entity and the creation of financial liability or equity instrument in another entity. Again, when we are referring to financial instruments, we are referring to contracts, and this is for security. And in this contract, you have two parties, this one and then this one. One party will be getting a financial asset and another party will be getting financial liability or equity. And these financial instruments are present in both your financial markets and financial institutions. So let's have some of the financial instruments. Let's go back. In a financial market, user may issue shares, bonds, and other financial instruments. So these two, shares and bonds, are financial instruments. And going back to the definition of financial instrument, one will get a financial asset and another will get a financial liability or equity. So for shares, it is a financial asset of the shareholder and equity of the issuer. And then for the bonds, financial asset of the bondholder and financial liability of the issuer. No equity. So the shareholder, aside from getting his or her investment, will also be getting dividends. And then for the bondholder, he or she will also get the investment as well as interest. So shares and bonds again are financial instruments. Given this, we can have another definition for financial markets being a place where financial instruments are traded. And now let's go to the financial institution illustration because we also have a financial instrument here. The contract entered by the bank and the user is called a loan, and loan is a financial instrument. Again, in a financial instrument, one will get a financial asset and the other one will get a financial liability or an equity. So in a loan, there will be financial asset to the lender or creditor and a financial liability to the borrower or debtor. No equity, of course. And those are some examples of financial instruments. So again, the financial system has four elements. Number one, we have the savers and users of funds, financial markets, financial institutions or financial intermediaries, and then financial instruments. And that's for the overview of the financial system. In the following videos, I will be discussing further financial institutions, financial markets, and financial instruments.